Hello, traders. Welcome to this live intraday strategy webinar. Today is Tuesday, March 17th. Mike Boutros on the horn with you guys. We just got the release of advanced retail sales for the U.S., showing a negative clip of 0.5%. We're only expecting a print of 0.2 on the positive side, but keep in mind, this is the data for February. So this is, ahead of when things got really bad with coronavirus. And we're already seeing retail sales on the contractionary side. Very interesting. We'll see how that pans out. Great to be with you guys here this morning. Hey, Jay, Kelly, Patrick, good to see you guys. Hope all is well with you, Pat. Lots to look at. I'm kind of in unfrozen mode on some of these setups because I haven't really been able to finagle many entries, but we'll definitely be taking a look at what's going on using the DXY less and less as sort of a barometer. The dollar crosses are each doing their own thing, right? As we always say, guys, rule of thumb, take every trade on its own merits. Sometimes we like to go with these thematic moves. We're just not seeing it manifested across the dollar crosses all at once. Looking at the dollar index here, guys, just on just on the basis of the weekly chart, who would think, looking at these last 2 weeks, that the Fed cut interest rates by 150 basis points, right? So sure, I think maybe, like I said at the beginning, if you guys were with me in the webinar yesterday, we're starting to see that clip for dollar catching a bid on risk-off moves. It hasn't, again, not really buying into it just yet, but here's what we're looking at. Just wanted to highlight the weekly chart, guys. The levels that we're testing right now, what matters on a weekly close, your weekly high week close at 99.34, still the level I'm looking at. If we close above that, you're basically still looking for a move into the uncovered close from 2017, and that takes into 99.98, just shy of 100. So the levels are pretty clear on the upside of where this thing needs to teeter out, and that's pretty soon if we're going to continue to move lower. Couple of things to note. We did get, again, just continued sort of support and jawboning from the government as far as initiatives coming down the pipeline to deal with the coronavirus impact on the economy. We didn't get much solace from that yesterday. As you guys saw, we got a 3,000 point drop, and I tweeted it on MB4X, my Twitter handle, guys, as soon as I heard what I thought the market was going to react to. And it turned out to be pretty much what things have, what the headlines ran with. That we may or may not be heading in recession. We may see recession ahead. That's pretty much baked in my humble opinion, guys. You can't have this kind of economic interruption, this kind of demand destruction, and not have some sort of near-term recession. Remember, all it takes is 2 quarters of contractionary growth, or contraction in GDP. So yeah, I'm pretty sure we're on our way there now. We haven't even seen the longer impact of this. We don't even know how long it's going to last, and already the deadening of what you've seen, just guys in the city, walking around the city, there is nothing open. I mean, you can't even eat at a restaurant a block from Wall Street, which is nuts. But all for the benefit, right, from the humanity side. But needless to say, the economic impact, in my humble opinion, is definitely putting us on a trajectory of recession. So that wasn't the main one. The big one was the expectation when he dropped maybe July, August, right, as when this thing would sort of, for lack of better words, he would say flush out or clean out, wash away. That's way longer than market participants were expecting. And we were already down 2,000 on the Dow. You saw another 1,000 point drop on those comments. We closed pretty much right off the lows. So we'll go to the S&P and SPX in a minute, but I just want to highlight, like, there's still a lot of risk ahead. Okay, and for the dollar, I'm not really a big fan of what we're doing here on the index. Watch for near-term resistance. Here's the daily chart. Okay, so the high week close, the high day close, we're popping through both of those right now. An objective break of the weekly opening range looks pretty decent, right? So 99.67 is going to be the 2019 swing high, okay? And then you have the uncovered close from 2017, and that's 99.98. So looking for a near-term reaction off one of those two levels if reached. All right. It's DXY in the 2 hour. Hourly chart, I mean, the daily chart, not really much to write home about. but here's what it looks like on a daily prospect. So we could probably drop this at this point. And we could probably even dump this retracement at this point too. Watch today's close. All right. Sorry guys, I have one eye on the headlines and one eye on the charts. We have also just a quick note. Dollar performance today. The dollar is the strongest performing currency against all its major counterparts. So every major, whoops, wrong terminal here. Every major is trading weaker against the dollar. Biggest loser on this session so far is going to be Aussie, Euro, and Kiwi in that order. Biggest gainer, or I guess smallest loser, would be CAD. So interesting that we're seeing this sort of breakaway, as it were. Euro dollar have some levels. Bet 109.50, 109.65 for a bounce at least. Your thoughts? So here's Euro. So before we do this, you guys know the Euro weekly chart. You've all seen this before. So this is a level that we highlighted a while ago, Pooja. For me, it's 109.76 is the low week close. Low day close gets in a little bit deeper, but the low week close from last year gives you 109.76. We're kind of testing that right now. Euro on, and of course we talked about this again on Monday. You know, the reversal off this key resistance was massive. That was really the breakaway zone that we needed to validate a larger turn. Here's Euro on the daily. Low week close 109.76, low day close 109.32 is my next level lower. What do you have at 109.50 there? Is there a specific level you're looking at, Pooja? From a daily standpoint, I mean, right here is the level that we're looking at, the low week close. Again, the November low comes in at the same spot right here. Low day close from last year comes in at 109.32. 1618 near term. Okay. Of the drop there. And 109.65 is the monthly pivot. Nice. Okay. So either way, we're both talking about this key zone right here. I know the 786 retracement, I removed it, Pooja, just for the sake of clarity. It's right on the low day close, 109.32, like literally right on it. So just to kind of keep things neat, these are the levels that I'm looking at here. So for Euro, we highlighted this back on the 15th. Here's what we were looking at. Slight adjustment to this slope. Okay, well, first the daily, right? The big level that we were talking about was right here. It grounded out twice into the zone. Into the open of the week, we tried to test it, didn't even make a test. Here's the definitive break. Okay, we needed to pop 111.86 on a closed basis to get this thing going. We didn't get it. There's the break lower right into the low week close. So continued weight here on Euro. Here's what the intraday chart looks like. This near-term upslope had me looking at this right into the open of the week, same spot. Let's see what happens. You got a decent rally. It ripped right into 111.86 and even higher into that 112.39 level, okay? Multiple times, then failed. Slight adjustment to that slope, right? Kept everything in line, just shifted these over a little bit. So you had 109.82, 109.76. That's where we're trading now. And then the low day close at 109.32. Both levels, you know, possibly looking for a near-term exhaustion trade here. I say exhaustion with a very nimble tenure, okay? Because it's a pretty sharp sell-off, and I do not want to stand in front of this trying to catch the low. That said, coming into 109.30s, 109, I mean, this is the ideal scenario. I don't know if we get that deep, but this is the ideal scenario. I'd be looking for some sort of reaction. But certainly seems like the initial risk still remains for a near-term move lower here. Okay, some headlines hitting the wires here, guys, just from guys I talked to around the city that there's talk of possible move to exercise shelter in place in the city, which of course would require everyone to remain home like all the time, unless you're going out for food, medicine, um, or something to that degree. But anyway, no, we won't run with the rumors. I'll keep you guys updated on that. As far as euro, I would say near term 109.82, 109.76, immediate support 109.32. If we get down there, both levels of interest to watch. If you're holding shorts, limits on both of these guys. I'd be taking a little off here into the US trade session if it holds. Break even or better, and then this is definitely something I'd be looking with a little bit more intent to react at. Things are stretched. It's not easy. Definitely not an easy environment to jump into new positioning. So if you're sitting at home and you're kind of thinking, man, I missed a lot of these bigger moves, relax. The market will always provide, right? The market will always provide. Do not jump into a position just to chase these moves. So that's euro. Again, looking for a reset here or some sort of ability to get back in, but I'm not going to chase this any lower. I'm going to go back to last night's update and hit those commodity blocks first. Actually, I take that back. Let's hit Swiss real quick. So dollar Swiss, we also covered here on the 15th, the open of the week. Here's what we were looking at. The main focus for me on this trade, look for possible exhaustion ahead of 96, specifically 95.88, 95.94. You had a 618 confluence there, an extension and retracement, both converging on channel resistance. Then you had basic channel resistance from the highs of the month there, last month on that peak, kind of giving us that risk, right, for some sort of near-term exhaustion trade. Well, we're getting the test, not getting the exhaustion. Okay, you got the pullback early in the week, and we went right into near-term bullish invalidation. So our targets were 94.57, 94.22. This is what needed to break to suggest a more important high is in place, that we're back in the resumption of the broader slope from February. Well, you got the pullback, you got the test, you even got a probe below channel support, quickly refuted, and here we are right back testing this key notion, key region right into the 96 handle. Look, at this point, not going to try to fight this. You know, the downside play held support. We're breaking the upside. At the end of the day, you know, while above basic weekly open support at this point, which is right here below the September low. Let's keep that in focus. You know, the risk is for a move higher. Immediately have some slope here. Let me just see what this looks like. Bear with me one moment. Yeah. Key support, near-term support, weekly open, September lows, resistance, next upside target, the objective yearly open 96.71 on the upside. All right, so constructive immediately on this swing. If it's got legs, 95.35 should hold support on any pullbacks. Bullish invalidation for the broader advance drops or rises to 94.52. And again, if we continue higher through this region, if we hold 94, 90s, 88s into the open, obviously the big figure is a psychological region here. But if we pivot, 96.70 is the objective yearly open. Really good spot. Converges on slope with that amended gradient there. Any questions on Swissy? It was a decent play into the start of the week. I mean, we got the pullback, but support held. Support held. Okay, so those are the Euro block currencies. Let's hit dollar CAD number 4. So dollar CAD on the daily chart, on the weekly chart. So man, I spent so much time with this chart over the last couple of days trying to gauge, I've reconfigured this so it might look like a little fresh take on it, guys, but here's what we're looking at with Looney. So on the weekly chart, the level and focus for me as we were writing this yesterday was right here. The median line for this broad formation that we were following off 2016, 2017 lows. A parallel, okay, a sliding parallel off that low, swing low in 2016, caught the high in 2017, 2018 crest, just above confluence resistance at the high week close, and the 786 retracement of the entire decline from the highs that we made, the post-crisis highs, right? So looks really clean. And again, a terrifying trade to kind of even contemplate trying to fight, but on a weekly chart, looks stellar. Looks stellar, especially the reaction we just got here so far. So look, again, it's too early to tell. We're not going to sit here and try to fight this, but what it puts us on is exhaustion watch. Okay, looking for divergence, looking for some sort of near-term corrective action, especially if that high holds. Reminder, we're in weekly RSIs in overbought condition, deep and overbought. I mean, that's not a time to really get aggressive on the downside, try to fight it. The momentum's on the side of the bulls, but you're checking uptrend resistance. Same thing happened here. You got a decent pullback, right? Of like 1.35% that week. You got the same thing as we were heading into even this confluence region. You got a pullback of 1.5% before you continued higher. My point being, we may see exhaustion, we may see the pullback. That doesn't materialize into a reversal, quote unquote. I'm doing air quotes, you can't see me, until we get back below essentially 140. But definitely a level I'm looking at. Now, if this pullback fails at that parallel, one of these parallels, man, the topside breach here is really nothing until 145. I mean, hit 144, sure, as a limit target, it's not a piece of the trade, but it's like 145.35. It's just the first target. That's just the first target. So big region for me, big region for me. Dollar CAD on the daily looks like this. As we always say, topside breach of upslope resistance. Look for the big accelerated move. Well, here was the gap above, that ripped. Here was the breach above, that got tested as support, ripped. Here's the 786 retracement and the the high week close. Confluence region at 141.15, 141.27. So a level that we're looking at converges on that slope we just looked at on the weekly charts. Support, break, acceleration, resistance, resistance. Any shorts you take or any fight against this trade, if we do try it into the US trade session, needs to be against that high. Again, if we breach, there's room. There's room. I mean, I might as well just bring up the 88.6. Like 143.90. But pretty big here on a breakaway gap. Haven't seen one of those in a while. All right, now on the intraday chart here, this is what I was working with last night. Real basic, looked like an ascending channel formation. Top side or the upper parallel looked like it converged right on that same region we've just been talking about. Let me get rid of that 764 again. And here's sort of the near-term exhaustive pull. Let's see how the US trade session opens. If this is a true break, right? Whoop. If this is a true break, again, breach of upslope resistance should see the fastest, or oftentimes will be the fastest part of the rally. And that said, if we open up and this continues, look for continuation up into 42 and 43.90 would be initial targets I'd be looking for. Weekly open support 38.89. At that point, or at this point, I'd be comfortable putting this as my near-term bullish inval with this break that we've made. So if we break below that, I think it'll shift the focus for a larger recovery down to the downside. We'll have to rejigger the targets once we get a high in place to put a retracement on. But that's my thought process right now. Look for a reaction here. All things held constant, it's still a bullish trade. I just want to highlight the risk for an exhaustive move here on this stretch. Questions, comments, concerns on dollar CAD. That's number 4. Dollar yen looks like this. It's actually a really messy trade as far as the daily chart's concerned. This is what I put on daily effects not too long ago. So for dollar yen, the last update, by the way, was on the 10th. We had the weekly charts and the daily chart there. Here's what it looked like. We had just dropped massively into this huge support zone, 100 spot 71 / 101.26. You had slope there. You had a whole bunch of stuff there, 50% retracement, and we had already made the rebound. We said broader bearish inval was 108.62. It's basically the yearly open. That's exactly where this rebound failed. Tested again, failed. And here we are right now with an inside candle. What's going on this week? Broader risk is lower below 108.62 still. Initial resistance, I'd still keep at the 108 handle. Here's what it looks like on the daily chart. It's messy. It's that pitchfork that we were working with. You want to work with that? Do you want to keep that? I'm not really focused on it right now. What I did like is that where we failed again, even on the stretch. 108.42, former swing lows that we made back in December of last year. It's the exact median line. So look, the sort of assumptive move for me was that this thing was gonna continue to fail, but I wanted to see a break below 104.65, 104 and 80s. Didn't even get there. Here's the open of the week. Okay, again, here's our last update on this on the 16th. This is yesterday. Looking for that pullback. I want to see some sort of reaction here. Looks like a decent hold. Jamie's looking for the long side on this. If this holds, I'm all with him. Looking for a weekly opening range play. At the end of the day, one thing to keep in mind is that I tell you guys this all the time. One of my favorite Fibonacci confluences. Here's 100 off the low, 618 off the high. My favorite regions. We closed the week right there. That's where we closed. So for me, it was intuitive, kind of look lower right into the open of the week. That pullback needed to break 105, 104.83, 104.65. Didn't happen. So while I'm tempted to just think this is, hey, look, break of resistance, check a support, and let's move right on. I'm mindful of the environment that we're in. Just keep the weekly opening range stretched into this and look for that break. Breach above 108, I think you're on down into 109.80, to be honest with you. That's a 786 retracement. The last year's open is 109.68. That's your sort of key zone on the upside next beyond 108 if we breach. So there's room. There's room. ATRs are widening out. Make sure you're reducing leverage size, but volatility is definitely there. All right. Airline group sees industry bailout costing up to $200 billion. The other thing is that he was very, Trump, by the way, yesterday when he was talking, was very direct in his, we're going to back the airlines 100%. I think market took a little bit more solace on that. We're seeing some help there, but we'll continue to see what that does. Anyway, dollar yen. Any questions here? I'm looking for a break of the weekly opening range for guidance. I still think the upside near term is at risk below 108 just because of the confluence region, the reaction that we've already seen in price right there. So look for reaction at 108 if reached. Bullish inval steady at 104.65, 104.83. All right, Kiwi. New Zealand dollar looks like this. Right. So, last ditch effort. What I wanted to highlight were these two levels of support, which we're focused on. On the weekly chart, it's really the 2006 low, swing low, was a decent pivot all throughout the sort of crisis drop and rally. That converges on the 618 line, okay, of the pitchfork for this formation just off the highs from July and December. So looking for reaction here, to say the least. Let me remove this sliding parallel at this point. Looking for reaction right here. Not to mention, you're already at what, 11-year lows? Break lower from here, and you're looking for a multi-decade 618 retracement, okay? And that takes you into like 57, 88, just below the 58 handle. So really big problems here for Kiwi. Looking for reaction here near term. Daily chart looks like this. Same thing, nothing new. Near term resistance 61.28, bearish inbound at the monthly open. This month's range is absolutely just phenomenal. Massive range. Intraday chart has us looking like this. Same slope, same confluence, initial resistance at this point. This was the support zone that we were looking at, right? This is a 1618 off the high, but you also had the objective weekly open. You had that bounce, you bambled against it right here. Here's the break. If this gives out, Geronimo, don't try to fight it. Looking for exhaustion right here, though, basically. Any questions on Kiwi? If you're short 59.29, something to do. 59.29, something to do. If you're looking for new exposure on a recovery, 60.10 should hold resistance. If this is heading lower, you have that swing low from last week. You have the weekly open resistance, 1618. You have slope. You'd have to get through that again. This is where you'd see resistance if this thing's going to move lower. So the initial focus right now is right here, but this is big multi-week, multi-month slope support. Okay, so those are all the crosses and the currencies on my menu. Let me know if there's anything specific you guys want to look at. Let's take a quick look at gold and SPX. I'll be releasing a piece on gold today for my daily FX piece. Here's what it looks like right now. Man, it's been really clean. I'm not gonna lie. Remember, all of us here have been waiting for this gold pullback. I know Pooja, I don't think Iman's in the room today, but we've been talking about this gold pullback for a while. Huge move. Now it's time to start lightening the load, start fishing, I think. Okay. The big zone, the 100% extension of the advance, the 50 of the 2018 rally gives you 1431 to 1447. That's a nice pivot that we made last year on the break test of support. And it's still a level I'd be looking at as significance here for gold. That swing high that we made back in September of 2013. Nice zone, just a nice zone. Did we miss it? And this is the pullback already? I think it's too early to tell. Okay, but curbing the appetite for the downside. Here's what it looks like on the daily chart. Okay, so we're working with this real sharp ascending formation. Again, all the mess and the hoopla that we got early in the month. Everyone's saying, thinking again, the coronavirus outbreak, this, market fear, the sell-off, gold's going to go to 2000 again. Well, again, things were really pent up. This thing was marking divergence all into the open of the year before this even became an issue. There's only so much that an event can push an uptrend higher when it's already near uptrend resistance. So we were looking for the exhaustion. Here's 1713, didn't even make it. Turn lower, break. This was the region we were looking for as larger support. both on account of slope and account of the fibs that we've been watching around this region. We haven't gone a daily close below. I want to make that clear. But still, this is the second day that we are spending below 1500. So the risk is, yeah, 1451 could still be another sort of level to test. Here's what it looks like on the intraday. All right. So this is the formation that we've been following. Here's what it'll look like back on the 15th, right into the open of the week. Looking for 1479. This is the major key support zone. Okay, way ahead of schedule, but there it was. That's the exact low we marked so far. Again, a 100% extension, 618 retracement, 1451, 1461. That's where we're holding. So I'm not in really a very, let me take that, let me put that on the table. I'm not bearish at gold here anymore. Okay, this was a decline that we've been talking about for weeks, and even when it started to move right here, and I thought there was the onset, we were looking for the move, we got faked out, ripped into a new high. I think we can safely say this is what we were looking for, but the depth and magnitude is what we're trying to gauge here. So look, above 1451, I'd be really cautious. Pooja saying divergence, yes, but I'm not convinced yet. Margin call liquidations still seem to be happening. You're talking about this divergence? Yeah, absolutely. This divergence right here, I don't know if that's real strong divergence. What time frame you looking at for that divergence, Pooja? You could say there's some divergence here. I wouldn't say it's the strongest, yeah. You remember, divergence signals below 30, above 70, those don't tend to be the best. But I hear you, sure. In general, ideal scenario. Like if you, again, I always tell you guys what I would be most happy to see. What take it with a grain of salt. I don't know if that helps, but ideal scenario, we actually save today, and we hold above 1495 on a closed basis. Because if that happens, be more comfortable thinking of a larger type of exhaustion trade that we just made here on the downside. Made a test of a major key support pivot lasting all the way since, all through last year, and then maintaining the broader gradient would have me wanting to see it close above 15 at or above 1500. But I just think it's too early to try to take a stance, to fight this. And as far as the downside's concerned, look, if we close below 1451 on a daily close basis, 1433, 1411 are next downside targets on a break lower. As far as trying to get into a responsible position, if you're not already holding shorts, the weekly open comes up right here in that same key support zone. This is where we open the week. So unfortunately, that's still bearish in Val. I don't know if you'd be willing to take a stop that wide, but that's why for me, I'm a little bit more keen here to looking for, pullback to buy now. Keep one thing in mind also. You can hear the fundy guys coming out of the woodworks now. We've had a second massive sort of interest rate cut from the Fed. So now you're going to get that bid again for people who are worried about fiat currencies in general, right? Add to that, if we continue to see market turmoil, which we are likely to see with a gold correction of this magnitude, yeah, I think now we can start to look and start to fish for a low. It's just my humble opinion, guys. I think we'll start to see those risk off, quote unquote, flows start to materialize to the textbook risk off that you saw in the financial crisis. Gold up, dollar up, yen up, risk down, Aussie down. Kiwi down, and then one risk is on, Aussie up, Kiwi up, equities up, dollar down. It's just like it was like a domino, like one way this way, one day this way. Everything was sort of in lockstep. Those correlations, those moves sort of broke apart as we were heading into this, and you're seeing that hopefully start to link up again. All right, last but not least, here's the SPX. Quick look at the levels here. It's been a radical move, not as disorderly as you would think looking at this from like a weekly chart. So you look at it here and you're kind of looking at this like, whoa, this is sort of panic, massive, crazy. It is, but the decline has been not all that disorderly. Again, the major level that we're looking at on a closed basis is actually the 2018 close low. That's 2412. Okay. Converges on the lower parallel, a sliding parallel of the same formation that we've been following way back since the 2009 lows. You guys have all seen this before. This is a log scale on a weekly chart. We were in this channel formation from the August lows of last year. Break. This is big. This is big. This is multi-year, over a decade long slope that we're looking to invalidate on this move. Weekly close below that is needed, to upset this whole thing. Okay, deep in oversold territory. Watch for a reaction here. SPX on the daily chart looks like this. All right. Whoops. This is a low we close. Let me just add this here. Okay. So I'm going to ditch the low day close. Let me just actually. Yeah, let me just ditch that at this point. This is the 2018 low day close. Here's the 2018 close low from the weekly standpoint. And you can see the back and forth action we've been seeing over the last couple of days have been insane, guys. Who would think each one of these ranges, if you take it on its face, would basically cover like 2 months worth of price action over the last year. Okay, we've now made that range consecutively, like almost 6 days in a row. It's just phenomenal. It's just absolutely remarkable. So look, beyond here, downside levels to pay attention to. 2008 low comes in at 2334. The 1618 of the immediate drop from the high that we made just last month gives you 2250. Nice round figure, like that number. Again, looking back in price action, you can see some decent pivots at that region. It's a big call. Immediate focus right now. We need to close below 2412 to continue the downside, to keep the downside bias viable right now. And that would have you targeting that 2008 low. That said, I've been working with near-term resistance at 2497. That's the 2019 open. Here's what the intraday chart looks like. I don't stress like yearly opens to that degree crazy, but the 2018 open 2 years later, yeah, it converges on that former slope that we were in for a couple of weeks here. There's the downside break. We tested it as resistance last week. There's the pullback again. That's going to be my near-term bearish inval. If we break back above that, I think you see a larger recovery, so to speak, in risk. But below 2671, I think the risk is lower still. I still don't think, to go back to your comment earlier, Pooja, I don't think that washout, that liquidation call, that jackknife is still, we haven't done it yet. You need to kind of see it. I say that, and that's sort of crazy when you look at this on a daily chart and you're like, what the heck? But as long as you got those guys still looking for bottom fishing here, and you still have this coronavirus, real unknown X factor, we'll have to see how that materializes. Okay, so bearish in about 2671, let's call it. Although 2740 is my favorite. That's that 618 that we pivoted at. But right now, let's see 2671. Break lower from here. You're looking for 23. You're looking for 2250. Okay, keep those both levels in view. Questions? Exactly. The washout isn't visible yet. Pooja, yeah, I completely agree with you. Okay, hasn't hurt enough for this to be a low. And don't forget the timing also has a lot to do with this, guys. You're going to see that when there is some more good news on the horizon, whether it's with the corona, whether it's with the vaccine, which I can't believe people are trying to trade on that. That's still a year out. Or whether it's on the economic improvement or economic aid package that's being offered to the markets as a result of this, there's going to be some sort of catalyst. And you won't know the washout's there until it's passed, but there's just too much concern right now, and there's not enough. I hate to say it, I don't think there's enough fear yet for this thing to have washed out and made a low. We'll see. Questions, comments, concerns on anything else before we wrap it up? All right. Well, if there's nothing else, Patrick, happy St. Patrick's to you. Happy St. Patrick's Day to you as well, sir. Same to everyone here in the room. Wish it was under better circumstances where we could actually go out and have a drink at a bar, but all things held constant. Keep your eyes focused on the markets, guys, over the next couple of days, specifically into the close of the week, and watch these closes. Don't get caught trying to catch the low just yet. I'll try to keep you guys updated on SB Squawk. Best of luck trading, and I will see you guys Thursday morning. Cheers.